Rick, we haven't had accidents really in a material way post-pandemic in this bond market at the long end in the way that some people might thought maybe we would based on these central banks pulling away. The cycle high, the post-pandemic cycle high on a 10-year, I believe was October, Rick. It was 430. Do you think we can actually get through those kind of levels again later this year based on what you're expecting?
So, I mean, the one governor on rates moving significantly higher is if you believe, which I do, that inflation is moderating, that the real rates are starting to expand. And then, people look at that, as you get to, a couple of percent of real rate, gosh, then, you start to get appealing. So, but do I think you can push back a bit more in the long end of the curve? Yeah, I think so. Listen, we think the next, we're going to get a CPI report. We think that's going to be a soft report again, probably buoyed by the same thing as last month, lower used car prices. So, listen, I think rates can move a bit higher in the back end, but I don't think they're going that much higher. And I think Mohammed said it earlier. I think the equity market has gotten to a place where you can absorb this sort of these sort of higher rates, and they'll probably be with us for a period of time. So I don't really see an accident. I do think we still have a challenge around commercial real estate. I do think we have a challenge around small banks in the country, but I don't think there's a big structural problem as long as the housing market, which is in pretty good shape, stays firm.
But Rick, to be clear, you still like stocks here?
I do. I mean, if you said, again, it goes to the point of I've got long durated risks that I can take. I don't want to take in the back end of the Treasury curve. I think equities, and, are we shifting our equity exposure a bit? There are a lot of businesses that actually trade at low multiples. We talk about autos, talk about airlines, home builders, parts of the energy sector that trade at pretty low multiples. European banks trade the low price to book. There are enough stocks that have, we could debate, semis, but there's enough equities that get you low multiples that as long as you believe the economy is moderating but in decent shape and the central banks are off the tightening boil, they're okay, to hold here. Particularly alongside, I've got carry in the portfolio that gives you a lot of ballast for what is a pretty stable portfolio today.